Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. Where we take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves just the one question: what happened today? What does it tell us about the coming ones? Do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. And as far as what did happen today, let's look at the numbers real quick. I'm going to start in Europe. DAX takes a drubbing, 1.5% lower. That does a bearish engulfing. We'll look at that chart. CAC's also down, drugged down by the DAX. Europe under pressure. Over in Asia, you actually had some rebounds, as you see here, 1.5%, 0.5% there on the Hang Seng tonight. And Nikkei was down tonight. It was up earlier today. If we look over at the U.S. markets, down on the Dow, slightly higher on the other indexes, which was the bounce we were thinking we might see today. They did try to take them negative, actually had them down pretty good at one point, but they came battling back. Got the employment number tomorrow. Looks like everybody thinks fourth quarter is going to be good. Gold, silver, really flat, nothing happening there. Same thing elsewhere. So if we go to the charts themselves, you actually had a decent push up today, considering all things considered, right? Because you can see how far it was down at one point, but you end up with sort of a hammer at the end. But you're coming into the top of the breakdown bar. That number up there is 1929. Today you got the 1927. You close it at 23, almost 24. It's always interesting to see how these markets find a way to, hang right at that critical spot in terms of, some sort of a news event. So, if we're looking here at the S&P 500, for example, critical spot right now is breakdown bar, and you're sitting right there by it. If we flip over to the NASDAQ, the NDX, those markets really did about the same. Didn't get any kind of real push, but we didn't get any fallback that stuck. So they tried to take them down. They end up reversing and taking it back up. Same thing on the NDX. The big part of the weakness there in the NDX and the NASDAQ, of course, again, was Apple. Apple under pressure all day long. Started to rally into the day. That's what took these back up and took the markets up as a whole. The weak spots were over in the Russell, where the markets tried to push higher, pushed into the bottom of the bearish retest regenerate bar. That's this low, 1102.58 was the low. You get up to 1103.70, you close back under it, 1097. So you go up, you get into it, you don't have the volume. That's going to try and regenerate lower. And so, just to make sure that we're clear here what we're talking about, when you're looking at these markets, what you're looking at and what you're looking for is to see how this retest back into the bar that was broken. Now, when you come back quick, which is what we've done, right, there's a decent chance, a fairly high probability that you're going to get to the other side. So in other words, this would push back to this top, right, the top of this bar. So it's back in there, touches it, but can't do it. Now, if the probabilities are high that it should do that and it doesn't do that and instead flips around and goes back the other way, that's really telling you just how weak this thing is and that you may get some sort of a larger move to the downside. So if this doesn't push up, doesn't get up into this area, right, the bigger moves happen in this form, and that is that you get a small bounce and then they just take it back down again. That's what leads to large moves. We'll see if that's the way this one wants to play out. It was a break on multiple time frames. If I bring over the Russell's weekly chart, you can see it here. The break here breaks that swing point low. And, well, excuse me, that was this break. This break, let me just grab my little cursor here. The break here, right, breaks this swing point low. So you broke on multiple time frames. Now you're trying to bounce back up in there. You're coming into this bar to start with. The break was over here. So there's a lot of resistance is the point in this area right here. So if the Russell can't get up in there, it's going to try to take it lower. And if the Russell's going lower, it's hard for the rest of the market to go higher. The big news, though, really wasn't in our markets. It was over in Europe again. Europe keeps setting the stage either higher or lower, this time lower. As you look at the DAX here, DAX does a bearish engulfing. In other words, they get above the prior day's high and under the prior day's low, and they close under the low. So they go over, back under. They started higher. That's a bearish engulfing. You get a dark candle. Dark candles on this kind of a move says you're going to try to go lower. And where's that lower? Well, there ain't much else to go after except for the lows. So this is going to be a push back to test that low that it just tested and gave us that big bounce off of. And if we look at it here on the weekly, right, you came into it last week with decent volume. Volume was about 6.5 versus 8. Not enough, but big volume. Now, going to try to do it again. You're already pushing 4.3, so you're probably going to do about 6.5 again at most. So again, not going to have the volume, but if you hit it enough, right, that's how you eat up demand down there, right? And if you eat up the demand and you can't, get some new set of buyers coming in, then you're going to try to push lower. Now, what we could get is an undercut, and I'm looking back over at these bars, in particular this one, and if I draw that one in, you can see that little zone right there. To me, it's really got to get under this bar to get it back into the big bar of October last year. So, it's pushing down. It can't quite do it, but it's trying, and we'll see if in fact it's able to do that before this is all over. Moving over to the CACs, you didn't quite get the bearish engulfing, but you get the same sort of sell-off. This one actually is going to try to go lower as well. It moved into the retest regen on the low. So again, here's the low. This is the retest regenerate zone. And draw it in, so it's right there, right? You tested into it once. Now you come back into it again. Rejected. I'm going to try to push lower. So the news really is in Europe. It's not the States. The news there is telling us lower. If I look at the sectors, there's really not a lot to report on, so I'm not going to take you through most of them. We did see IBB and the SOX, right, which were two very weak sectors today. Both of them have their issues. The IBB's pushing back into that little congruent area, the overlapping area that I talked about before. And so that's this area. There's a video on the front page if you want to look at it. That's the area it's trying to push in, and once it finishes here, once it can't get any higher, and you can see the volume tailing off, this thing is going to go back down and try to break down these lows and test this one again. Has volume, looks to me like it's going to break it if in fact it gets going again on the downside. If we look at the SOX, and that's a big reason the NASDAQ's having a hard time, the NDX. If we look at the SOX now is a little bit of a mixed signal here. It's not easy to read this one, and I'm not going to try to make a definite tell on this. But you got under, you had more volume than you did yesterday. So you go under it, you have more volume. Normally that would mean that you'd try it again, but you're also coming into the top of this big bar, and you don't have the volume. So to me, that looks like a stalemate, and it can go either way. I'm not going to try to take a guess on which way it's going to go. But, for the most part, sector-wise, didn't see much. Most indexes, most sectors, as they come back up to either the breakdown bars or up into the retest regens on the bearish side, that's where they're having, and those problems aren't going to easily go away. Now, some days we have a pretty good read on what the next day is going to be. And when I do, I give you a pretty good heads up, that this is what I'm thinking. But, tonight, you don't have a good read, right? You've got a big range here that's building out. And that large range, just like we saw when we had the prior range, right? That range is just bouncing around, up and down inside the range is what happened before. And then eventually, right, you got the break. Well, what do you have now? You got the push down that creates the bottom. You bounce off. You come back. You test a little bit. You go test that top. Can't break it out. Now you come down. You want to test the bottom. Well, didn't quite get there, but you weren't able to break it out, so you get another bounce off of it. If this turns tail and comes back at it again, you know, it's going to try to break it, and it's probably going to have a better shot at it because you use up some of the buyers every time you come close. That was what happened here. If you come back down, you use up some more. What you don't know is how many's there. Usually 3's the charm, so I don't know that you're going to break it out yet, but if you do flip around and come back, that would be the test, and that's, you know, you'd want to be looking at that test because, you know, that you can tell they want to buy these lows on the assumption fourth quarter would be good because typically fourth quarters are good. You know, the November through April period is the strongest part of the market. And so everybody wants to be on that trade. And so that's what this buying is all about. Nothing more than that. You got an employment number tomorrow. I suspect that number's still going to be good, which is going to be the interest rate talk, you know, where rates are going to go up. But right now, you know, and this is what we'll leave this on tonight, right now, the interest rates are not showing any tendency whatsoever to be fearful of an increase by the Federal Reserve. And what I'm going to do is I'm going to pop up the short end of the curve. Now here's the 3 to 7s up there almost to make highs. And if I move over to the 1 to 3s, they're doing the same thing. They're coming back up to the highs. If rates are going up, these would not be hitting highs, driving interest rates on these short-term notes lower. So the market clearly isn't discounting a rate increase in October. So that doesn't look to be on the table. If we go back now one more time to the market and ask ourselves, you know, what's tomorrow? On the back of the German market, I suspect we're going to try to trade lower first thing in the morning. And by the time that employment number comes out, we're going to see whether or not, you know, it somehow juices this market or not. My suspicion is it's not. You're going to get some sort of a pullback tomorrow into the weekend. That's it for tonight. Thanks for joining me as always. Take care, and I'll see you next time. Good night.